Good afternoon. It's Jeffrey Christian, CPM Group. It's about 12:33 in the afternoon of Friday, the 5th of July here in New York. I want to talk today about CPM Group's price projections and explain what exactly we do in terms of putting out price projections. We used this chart in a video earlier in the week showing our buy and sell track intermediate term buy and sell gold recommendations since December 1980. And you can see that from 1980 to 2000, we were back and forth, go short, go long. November of 2000, we said go long. This is a big one. This is something of historic proportions that's going to last several decades and take prices far beyond the $850. That was the previous record in January of 1980. So these are our buy and sell recommendations, which are based off of our long-term and intermediate-term price projections. And I'll talk about that as we go forward. I should say at this point, gold right now is trading at $2,392 for the August COMEX futures contract, and silver is around $31.56 for the active September contract. That's important because I'll get to our very short-term price projections later in this presentation. And 2 weeks ago, we were saying that we thought that gold could touch $2,400 over the next 2 weeks by today. And we're within distance of it. And we had thought that silver could spike as high as $32. And yes, it's gotten up to $31.56, a little bit shy, but we got the direction right. Anyway, we got this comment on that video, and the fellow said, hey, there's these big gaps in your chart between 1999, it's actually 2000, and 2012, and also between 2014 and now. Were there other things? Yes, there were. And that comes to the heart of what we do in terms of price projections. We have what we call very short-term price projections, which are 1 or 2 weeks long. And we used to provide those to consulting clients who were very active hedgers. So we had a number of mining companies from the 1980s into the early aughties that were very active in hedging their materials. And we would actually give them views as to where we thought a suitable range was. We also had several hedge funds and other institutional investors and high net worth individuals who were buying that kinds of consulting. Over the last several years, we have created what we call trade recommendations for gold, silver, platinum, and palladium. We're talking about adding oil and copper to that because some of our clients have asked about it. These are what are our views of the price range and possibilities over the next couple of weeks. And I'll show you an example in a second. We also have what we call short-term price projections, which are 3 months and 2 years. And we publish those in our Precious Metals Advisory for 5 precious metals and in the Base Metals Advisory for the 6 base metals that are trading on the LME. And then we provide other projections through consulting services. We have intermediate term price projections, and that's what we cue those intermediate term buy and sell recommendations off of. That comes to our clients mostly through specialized consulting and annual research and consulting packages. It also comes through the Precious Metals and Base Metals Advisory reports. They're published there. And then we have long-term projections. Typically, those go out 10 years, and we do it for gold, silver, platinum, palladium, rhodium, iridium, osmium, ruthenium, tantalum, titanium, high-purity manganese, molybdenum, niobium, hafnium, and other metals, including uranium and other commodities, including energies and agriculturals, on a client-specific basis and through long-term outlook reports. So we have a range of time periods that we use from the very short term through short term and intermediate term and long term. And that chart These are our intermediate term recommendations. If you are an investor with a 1 to 3 year time horizon, this is what we would have been telling you at any of those times. And yes, all of these were published recommendations, so you can go back into J. Aaron reports in 1980-81, Goldman Sachs reports from 1982 to 1986. Actually, you can go forward into 1989 because we continue to produce research for Goldman Sachs even after we left in 1986, and CPM Group reports from 1986 to the present. And you can find reports, many of them copywritten, and others published, that have these buy and sell recommendations memorialized. So it's a matter of record. These, you can see, yes, there was a long period from November 2000. We said major change, upward shift in the investment demand curve. The gold market is not what it has been for the last 40 years. It's going into a new area where gold prices will rise on a sustained basis. More investors will buy more gold in more parts of the world for a longer term time and a higher price than ever before in history. And that has been the case. We did issue a sell recommendation. The published one was in our first precious metals advisory of 2012 in January 2nd or 5th or something like that. 2012, the precious metals advisory title was A Time to Sell. But starting in September of 2011, when gold prices actually peaked, we were telling clients through other media that we had thought the gold price had peaked. And we had actually been telling clients for about 2 or 3 years, going back to about 2009, 2010, that we thought that the gold price would peak and would enter a 3 to 5 year downward period in prices, a consolidation in a broader bull market, followed ultimately 3 to 5 years later by a renewed upward move, similar to the one that we saw from 2000 to 2011. And we did. We saw the gold price fall to 1211 in April of 2013, just a couple of years after the peak, 1.5 years after the peak, and we issued a buy recommendation. We were a little bit premature because the price actually did move sideways into 2019. So it was from 2011 to 2019. It was an 8-year downward move, a 2-year downward move, and a 5-year sideways move in gold prices before they started rising again. And yes, we have not changed our intermediate term view since April of 2013. So these are our intermediate views. Now, within that, there have been many short-term buy and sell recommendations to take advantage of what we saw as shorter-term upward moves and downward moves. So that's there. Now, let's see. This is an excerpt. Over here on the right-hand corner, you can see the first page of a 2-page gold trade recommendation. These are the very short-term recommendations. This one was issued on the 20th of June, and it said that between then and July 5th, we thought that the gold price, which was $23.71, could hit $2,400. It got close to that actually on the 21st of June, backed off, came down, and now in the last couple of days, as I said, it's been rising again to $23.92 as I speak. That's the very short-term gold. Again, we do this for gold, silver, platinum, and palladium, and our clients subscribe to it. These are charts from our precious metals advisory from December 2022. The precious metals advisory has a chart similar to the one on the left here, which shows our expectations for the ranges and averages over the next 3 months. And another chart, similar to the one on the right here, which shows our quarterly price expectations for the next 8 quarters or 2 years. So these are short and intermediate term price projections, and they show up in our precious metals advisory. This is from 2 years or year and a half ago. And of course, I used it because we were pretty much spot on. We were a little bit overly bullish on the short term, and we were a little bit under bullish in what we had expected for the first 2 quarters of 2024. But this is what shows up in our precious metals advisory for clients that want to subscribe to that. And that's what we were saying 2 years ago. These are our long-term projections. We used this chart a couple months ago in a video on May 31st, and which we were discussing our projections. And I blocked it out, but these are 10-year projections of annual real and nominal gold prices. And you can see that this is from December 2021. We were expecting gold prices on a real basis to get up to as high as 2024, and on a nominal basis over or around $2,600 over the course of the next several years. And then I blocked it out. And this is our silver projection, which is, again, very similar type of thing. These are our 10-year projections. All of that goes into our intermediate term recommendations. All of our research is based on fundamental research of the markets, which we have a better handle on than anybody else, and our macroeconomic top-down view of the world, politically, economically, and socially, and in terms of financial market conditions. And we put all that together and we come up with a view as to where we think the markets are going. We add in special information that we collect around the world on market conditions. And then we say, okay, if that's it. Now, then we look at the historic pacing of metals prices. And we say, if we think the price is going to rise or if the price is going to fall, how high do we think it's going to go? How low do we think it's going to go? Now, what's the pacing going to be? And we have our pacing expectations are based on a combination of, well, how have the metals prices behaved in the past? And how might that be the same or different going forward based on our view of the market fundamentals and the macroeconomic and political environment that we see coming down the pike? So we put that together and we come up with what we think are rational expectations. So we might say we think the price of gold is going to $2,400, but we might not say that it's going to go there tomorrow. Actually, we might now because it's there all for all intents and purposes. But you'll find people who talk about, well, gold's going to $10,000 next week, or in the next 2 weeks, silver's going to hit $100, and then it's going to $1,000. And there's no rational support for prices rising that fast or falling that fast. They do sometimes rise at a very fast pace and fall at a very fast pace, but one has to take into account what is rational and what is irrational. So that's pretty much what we do. Next week, we will be launching our Platinum Group Metals Yearbook. Actually, I guess it's 2 weeks from now, I think. I hope, because we're working on it now. There will be an online briefing that people can plug into. You can go to cpmgroup.com and you can sign up to participate and plug into that yearbook briefing, where we'll talk about what we see going on in the platinum, palladium, rhodium. Well, I'll also touch on iridium and ruthenium a bit. What we see going on and what we expect to happen over the next year or so. Then there's a question and answer period. So you can sign up for that at our website. You can pre-order the Platinum Group Metals Yearbook. You can order the gold and silver 2024 yearbooks. They are out. You can buy other research. You can write to us at info@cpmgroup.com and say, I'd like to be your client and plug into. I'd like to join the CPM Club. I'd like to know what you guys are seeing and what you're thinking it means for future prices, either on the very short term or in the long term or in between or all of the above. That's all I have for now. Take care of yourself. Have a good weekend. Take care of those around you. Try to do something good for Mother Earth, because Mother Earth really wants some nice attention at this point. I'll talk to you next week.